Hello everyone. I'm going to explain about types of royalty accounts and the technical terms used in royalty accounts. A royalty is a legally binding payment made to an individual or a company for ongoing use of their assets, including copyrighted works, franchises, and natural resources. A royalty is an amount paid by a third party to an owner of a product or a patent for the use of that product or patent. The term of royalty payments are laid out in a licensing agreement. The royalty rate or the amount of royalty is typically a percentage based on factors such as the exclusivity of rights, technology, and all the available alternatives. Royalty agreements should benefit both the licensor, the person who received the royalty, and the licensee, the person who pay the royalty. Then royalty payments may different types of property. Some of the more common types of royalties are book royalties, performance royalties, patent royalties, franchisee royalties, and mineral royalties. So we are going to learn about types of royalties individually one by one. Book royalty, they are paid to authors by publishers, typically for every book that is sold. The author will receive an agreed amount. Performance royalty, it is a royalty of performance which will be given for certain performance. Patent royalties, innovators or creators patent a product. Then if a third party wants to use the same product of patent, they must enter into a licensing agreement that will require them to pay loyalties to the patent owner. This way, the inventor is compensated for their intellectual property, in short we know IP. Franchisee royalty. A franchisee, a business owner, will pay a royalty to the franchisor for the right to open a branch under the company name. It is known as franchisee royalty. Then mineral royalties, also called as mineral rights. Mineral royalties are paid by mineral extractors to the property owners. The party that wants to extract the minerals will often pay the property owner an amount based on either the volume or revenue of the unit, such as barrels of oils, tons of coal, etc. Then the technical terms used in royal account is going to discuss below. The first term, which is a common term mainly used in royalty account, is minimum rent. The leasee is required to pay minimum amount to be the leaser. This is despite in fact that is the actual royalty amount, which is calculated based on the items produced or sold is less than the minimum rent to be paid. Such a guaranteed minimum amount so received by the leaser is called minimum rent. Minimum rent is fixed at the time when the leaser entered into an agreement with the lessee. It is a term included in the contract in the interest of landlord as assures minimum rent even in cases of lower sales or output. Therefore, the lessee pays minimum rent or the actual royalty amount, whichever is higher. Since the amount of minimum rent is to be paid is fixed, it is known as fixed rent or dead rent. It is also known as minimum. So, the agreement entered by the lessor and the lessee under royalty account provides a provision. This provision is mainly created for carrying forward the shortcomings. The main aim of creating such provision is for adjusting the same in the future. So, if in case in the following years, short workings can also be adjusted against the excess royalty amount. It is known as short working capital. So these are all the technical terms commonly used in royalty accounts. So the first one is minimum rent. Second one is short workings or redeemable dead rent. It is also known as the minimum rent excess of the actual royalty. You can easily calculate it by reducing actual royalty minus the minimum rent amount. You will get the result as short workings or redeemable debt amount. Excess working is nothing but the amount by which actual royalty is more than the minimum rent. If the actual royalty is excess than the minimum rent, then you can get excess working. So it can also be find out by deducting the minimum rent from actual royalty. So the excess amount that you get is called as excess working. So recoupment of short working is an agreement entered by the lessor and the lessee under royalty accounts provides for a provision. The main aim of creating this is it can be carry forward of short workings in order to adjust the same in future. So these terms are commonly used in royalty accounts agreement. Without proper understanding of these terms, it is impossible for the lessor and lessee to perfectly act in this royalty accounts procedure. So it is important to understand the terms clearly before entering into any contract of royalty codes. Thank you.